Hey everybody, welcome to Everything Accounting. I'm Alfred, your friendly neighborhood CPA, and today I want to do things a little bit differently. I'm sure most of you are on social media and most of you have seen these TikToks or these Instagram posts about these like super ultra rich people that are like, I write off my G-Wagon, or I write off my personal chef, or that private plane that I'm just sitting in right now, I wrote that off through the business. It's a business expense. The problem that I see with this is because it's all over the internet, and unfortunately, young entrepreneurs and young people across the board believe it. It's not true. If you actually educate yourself and you actually understand how to run a business, you can't just write these things off. Now, there are rules in place for write-offs. There are rules in place for what you can or can't write off. And I want to walk you through a little bit of why you can't just write off a private plane or why you can't write off a G-Wagon. But there are some times where you can. It really depends on the nature of your business. Now, I talk to clients about this all the time. The nature of your business is what you do for a living. So if you sell cars, you're selling luxury vehicles, then sure, you can purchase G-Wagons, you can apply them as inventory, and then when you sell it, you have your cost of goods sold, so you're basically applying it as a write-off in that case. But if you're constantly writing off cars just because you want to drive around luxury vehicles, then soon you're going to be out of business. Soon your inventory is going to be depleted and you have to sell these things. Now, there's a few people that I see every once in a while. They're like, yeah, I take my private jet everywhere because it saves me money. CRA is not going to be like, oh yeah, the private jet expenses that you're incurring, totally reasonable. If you're running a $100,000 business, there's not a chance. If you're running a multi-billion dollar business and you're flying from one location to one location and your travel expense is, say, under the maturity or under the materiality complex or the materiality rule, then sure. Now, materiality from an accounting standpoint is essentially a threshold of what is acceptable as an expense and what's not acceptable. And that changes every year, that changes with your business, that changes with the nature of your business. So typically what a lot of people say is aim for expenses around like 5%. But if it changes significantly one year over the other, then CRA is going to be like, oh, red flag, we got to figure out what's going on there. So you can't just write off a private jet one year because your accountant told you to do that. Cough, cough, Grant Cardone. That doesn't work, right? What you need to understand is, first of all, buying something of that value is an asset. So it's not going to be a write-off because you have to then depreciate that asset. And the bigger the expense, the more expensive the item, the less likely it is that it is expensable and more has to be treated as an asset under your books if you can apply it to your books. So when it comes down to certain things like that, like as an accountant, right, I go meet clients all the time. I have to drive my car to go meet clients. Now, I'm not running a multi-million-dollar accounting firm. I'm not going around flaunting my wealth. But what ends up happening is I have to have a vehicle that is reliable to be able to drive around from point A to point B for all my clients. CRA has basically built out a rule of what can and can't be written off. Every year, like I said, it changes, but to a degree, a reasonable expense is a lease on a car of $800 a month. So if you go and get a G-Wagon and you can somehow get a lease for $800 a month, then maybe in the nature of your business, you can write it off. But good luck finding a G-Wagon for $800 a month. It's not going to happen. So it's really, really sad when influencers constantly talk about these expenses or these lavish lifestyles that they live. They just write off in their business because it's not true. What they're actually doing is just trying to sell you on their book or sell you on their course that brings them money, which they can then rent these things, claim that they own them, and then show off that, hey, I get to write these things off, you can too. That's not how it works. That's not how any accountant is ever going to allow it to work. And if you have a good accountant, they're not going to allow you to do that. So all these things have to come into play. So the nature of your business, like I was saying before, is dependent. So if you have a trucking company, obviously an expense on your books is the fuel, truck repairs, travel from point A to point B, the meals that you're having your employees take on, the tires that you're buying for your trucks, all that. 100%. It's reasonable for you to buy high quality trucking equipment for your trucking company. Me as an accountant, I don't need trucks. So CRA is not going to be like, oh, why did you buy a fleet of 30 trucks? You didn't need it. So it's not something that you can write off. So CRA will deem it as non-applicable and essentially say, hey, now you paid for those things, fine, run it through your business. It doesn't matter to us. You still have to pay tax, not accounting for it. So all these things have to come into play. All these things have to be accounted for in the nature of your business. If I am running a car dealership and I'm buying cars left, right, and center, and I'm selling cars left, right, and center, and I need a vehicle to show off the type of cars that I'm selling, right? Not show off, but essentially showcase the types of cars that I'm selling, then sure, write off a car. But it's very rare for you to be in an industry where all these things are applicable. So that car dealership example works for cars, but you can't buy a private jet with that and say, hey, I'm going to write it off in my business. That doesn't work. So what you can and can't write off is dependent on the nature of your business. There are also regulations. So understanding the regulations that you're under is key as well. So you need to know, hey, this I can write off, this I can write off, this I can't write off. So am I going to apply it to the business and still pay tax on it? Am I going to pay it out from the business and pay tax on it? Whatever you deem fit. But the reality here is you have to understand what you can and can't spend. The other thing that I find very, very important is you can't just believe everything on the internet. Even to the degree of me telling you this, fact check me. Like, I want you to go out and fact check. I want you to be able to go and say, hey, this doesn't seem right. Something's off. I'm going to do my own research. Blindly following these false influencers and these false entrepreneurs that are telling you, hey, I made $3 billion last year. You didn't, right? You maybe made 20 grand. So don't just blindly follow everyone. Question. That's just top notch why I always hate when people are like, hey, how do I write off my G-Wagon? Or how do I write off my Lamborghini or my Ferrari or all that? You can't, right? And if you're going to try to, I'm not the accountant for you because none of this makes sense, right? So do your research. Make sure to, obviously, sure, I want you to listen to me, but at the same time, I want you to double check, research. And if I'm wrong and you found that in your research I'm wrong, tell me in the comments, right? I will 100% acknowledge if I'm wrong or not, right? But with a lot of these influencers and a lot of these people that are saying, hey, buy this, or put all your money into this so that you're never paying taxes. If it sounds too good to be true, it's probably too good to be true. So always double check, always also have people on your back to make sure that you're doing the right thing. So having a good lawyer, a good accountant, having a good team behind you to support you and make sure that you're doing the right thing is key as well. So it always falls down to the nature of your business, understanding what you're doing, and understanding the kind of expenses you can and can't write off. Please be vigilant. Please double check, do your own research, and don't blindly follow people on the internet, because most people on the internet want something out of this, right? So just take the time to do the research and take the time to evaluate what they benefit from telling you this kind of information. So, as always, I'm Alfred, your friendly neighborhood CPA. Fact check me on all these things. Fact check others on all these things. Take your time, do your research, and understand the nature of your business. Please, if you want, subscribe, comment below, talk to me about things that you do think are expensible or what you think isn't, and we could have a conversation about it. Feel free to reach out, talk to me, chat, send comments, subscribe, and hopefully we'll see you soon. Thanks again.